What's up, everybody? Today we're going to tackle manufactured homes, those so-called affordable options that may actually cost you a lot more in the long run. I know, you've seen the ads. Modern, budget-friendly, move right in. But here's the problem. There is a lot they're not telling you. And if you're not careful, you could find yourself in a financial disaster that you never saw coming. So today, we're going to break it all down. I'm talking about the biggest pitfalls of buying a manufactured home. From sky-high interest rates to corporate investors buying up entire communities only to jack up the rent. And stick with me, because in the end, I've got a real-life horror story that'll make you think twice before you sign that contract. So, let's dive right in. First, let's clear something up that confuses a lot of people. What exactly is a manufactured home? You might have heard the terms mobile home, manufactured homes, modular homes interchangeably, but they're actually quite different. A mobile home is a factory-built home made before June 15th, 1976. That was before HUD, the Department of Housing and Urban Development, stepped in and said, yeah, we need to start regulating this industry. So mobile homes built before that date, they didn't have to meet any kind of federal construction or safety standards. It was kind of like the wild, wild west of housing. After 1976, HUD laid down some minimum standards, and that's when homes started being called manufactured homes instead. So technically, really the only difference between a mobile home and a manufactured home is the date they were built. But here's the thing. Even though manufactured homes have the same regulations, they are still not built the same way as site-built homes. And this is where the problems start. Now, a modular home, that's completely different. It's also factory built, but it's assembled on a permanent foundation and has to meet the same building codes as a traditional home. If you're thinking about factory-built housing, a modular home is a much better investment because it holds the value just like a regular house. But manufactured homes, that's where you run into a lot of trouble. The first issue is depreciation. You know when you drive a brand new car off the lot, it instantly loses value? Well, manufactured homes work the same way. If you buy a traditional home, let's say for $250,000, in 10 years, it could be worth $300,000 or $350,000. That's typically how real estate works. Over time, it gains value. But if you buy a manufactured home for $150,000, in 10 years, it might only be worth $90,000. Or worse, you might not be able to sell it at all. Why? Because manufactured homes are usually classified as personal property, not real estate. That means that banks, lenders, and even buyers see them more like an RV or a car rather than a house. Unless a home is permanently affixed to the land that you own, it's not considered real estate. And even if you do own the land, the home itself doesn't hold value like a site-built house. And this is where it gets really shady. Some dealers inflate the prices of these manufactured homes, knowing that they'll lose value fast. So when you're sitting there looking at this brand new, gorgeous manufactured home with shiny appliances and thinking, this is a great deal, you might actually be paying way more than it's worth from day one. And if you need to finance it, welcome to loan shark territory. Most banks won't even offer traditional mortgages for manufactured homes unless they are permanently attached to the land and meet all local and HUD standards. That leaves most buyers with what are called chattel loans. Now, if you've never heard of a chattel loan, it's basically a high-interest, short-term loan for movable property, like boats, trailers, and yes, manufactured homes. The problem? The interest rates on these loans are way higher than regular mortgages. While a traditional home may have a mortgage interest rate of 6 to 7%, a chattel loan can be anywhere from 8 to 12% or even more. And the terms are shorter too. Instead of getting a 30-year mortgage, you're often stuck with a 15 or 20-year loan. This means higher monthly payments for a home that's losing value every year. And here's where it gets even worse. Dealer financing. Manufactured home dealerships love to push their own financing. Because guess what? They make money off the loan too. They know that buyers have limited options, so they lock people into terrible loans with even higher interest rates. So what seemed like a cheap home at first, it's suddenly just as expensive as a regular house, but without any of the benefits. Now, if you think that this is bad, let me tell you a real story that makes it even worse. A couple in Florida thought they were making a smart financial decision when they bought a manufactured home in 2015. They paid $85,000 for it, and the lot rent was a manageable $400 a month. Then, fast forward a few years, the lot rent doubled to $800 a month. And then a hurricane hit. Their home was severely damaged, and even though they had insurance, the payout, it wasn't enough to cover the repairs. Now, they're stuck. Their home had lost all value. The lot rent kept rising. They couldn't afford to fix it. They couldn't afford to move it. In the end, they had to sell at a huge loss, and they walked away with almost nothing. And this is not a one-time case. This happens to so many people who don't realize what they're getting into. Manufactured home parks increase rent every year. These homes lose value, and when disaster strikes, you're basically completely on your own. So let's talk about the land, because a lot of buyers don't actually own the land that their manufactured home sits on. Many manufactured homes are placed in communities where you rent the lot, meaning you have a mortgage or a chattel loan, and monthly lot rent. And here's the problem. That rent can go up every single year. Remember our Florida couple. This brings me to one of the biggest nightmares happening in manufactured home communities right now. Corporate investors are buying up manufactured home parks, and it's a disaster for its residents. Let's talk about Haven Park Capital. This private equity firm has been snatching up manufactured home communities across the United States and immediately raising the rents by as much as 50 to 100%. Take what happened in Iowa. A woman had lived in her manufactured home for 16 years. She was paying $295 a month in lot rent. Then a corporate investor went and bought the park. And within a year, her rent jumped to $495 a month. That's a 68% increase overnight. And here's the worst part. If you own a manufactured home but rent the land, you're stuck. You can't just pick up and leave, because moving a manufactured home costs anywhere from $5,000 to $15,000. So you either pay the higher rent or you could possibly lose everything. And just when you think it can't get any worse, let's talk about insurance. Insurance on a manufactured home is way more expensive than a traditional home. Why? Because they're higher risk. Fires spread faster. Storms cause more damage. The material used, they're not as durable. This means that insurance companies can charge way higher premiums. And in some areas, they won't insure them at all. So to recap, now you've got a home that loses value, a high interest loan, rent on a land you don't own, a corporate landlord who can raise your rents whenever they feel like it, and insurance costs that go through the roof. Tell me again, which part of this is actually affordable? So would you still buy a manufactured home? Drop a comment below, because I would love to hear your thoughts. You know, I make these videos in this never series, never buy this, never buy that, just to help educate you guys on the possible pitfalls of buying different types of homes. But if you are thinking about buying a home anywhere in the country and you would like our help finding you an experienced, vetted, great real estate agent, just fill out this short form in the pinned comments and I will get in touch with you immediately. And if you're thinking about moving to the DC area and you'd like our help, just send me an email. We'll set up a Zoom. We'll get you started. If you happen to miss our video on why you should never buy new construction before you watch this, definitely check it out next. It's a good one. Hope this video gave you guys some value today. That's all I'm trying to do, is provide you the best information so you can make the best decisions. Have a great day. Thanks for watching. I do appreciate it. Bye.